Welcome back, everybody. Ready to bring you another episode of Knowledge Rich. Last week, I talked about how to beat inflation. Obviously, we're all feeling that right now. You're paying more for gas, you're paying more for groceries, and I talked about how real estate can help you beat inflation. Some of those options are buying your primary residence, buying short-term rentals, buying long-term rentals. So with me today, I got a special guest, Andrew Lamacchia from the Lamacchia team at Guild Mortgage. He's going to help us discuss different loan products that are out there right now that can help you acquire some of these real estate investments that are hedges against inflation. So Andrew, I'll get out of your way. Please introduce yourself.
No, absolutely. And I think you bring up a great point. I'm excited to be here today and talk about some of these things. A little bit about myself. I've been a lender for going on 5 years. Before that, I was actually in the IT space, selling services, software, hardware, a lot of boring stuff. And I didn't really like what I was doing. And I wanted to find something that was a lot more fulfilling, a lot more challenging, a lot more fun, and a way to make more of an impact on people's lives, right? My dad is a realtor, so I got to see his interaction with clients and how it changed their lives. And I thought it made a lot of sense for me to become a lender because I like more the numbers piece. I like putting the puzzles together and helping people grow their finances as well. So I'm excited to be here.
Yeah, we're learning new things. I didn't realize you were in the IT industry. I worked at Rackspace for 12 years.
Well, I worked there too.
Hey, look at us.
Not at 12. I was a racker, I wasn't there for 12 years, but I did right before they went public, right before they moved in the castle.
Wow.
So, yeah.
Look at that. So we just learned something new. So all you rackers who need a loan, now we got
there you go, yes.
a fanatic in here with us that can help you.
Yep.
So last week, the Fed announced that they're going to go ahead and raise interest rates. So that's going to impact people's ability to purchase properties.
Mm-hmm.
It's going to impact your mortgage payment every month. It's going to impact your budget for your home. And I did a separate video on that, which is down in the description. You can check out the impact rising interest rates have on your monthly mortgage payment. But do you offer any products or services specifically designed to help buyers when rates are on the rise and kind of unpredictable?
Yeah, I have a couple things to say about that. First, one of the ways to partner as a realtor is have these conversations early in the process with your client and also their lender, because the stakes are higher now, and as you see rates go up, payment goes up, and that could jeopardize an approval, and are aware of how potential rate increases could affect them, and see how they have planned for that. And going into that, one of the things we offer is a builder rate lock program. So this is very popular right now. Clients are looking to build homes, and whether they're like D.R. Horton or KB Home or something like that, or maybe they're doing their own custom build, we have a really strong product called a builder rate lock program that's going to allow them to lock in their rate for up to a year.
Wow.
So that's going to give you a really hedge of protection against rising rates, because this is the time to do it. Like, as rates go up, and it's scary in the sense that we don't know how fast and how much they're going to go up. I mean, I've had rumors all over the place, but no one really knows. We just try to do the best we can with the information we have. So I can lock someone from a 90-day, that's like the most I can do on a standard program, but I can go out to a year when someone's building a home.
Wow.
Now, there's some a protocol and a process to it. There's some things we need to get done. There's an upfront piece from the client, but it's going to give them the ability to lock in and set a ceiling for their rate.
Nice.
So they know what their max payment's going to be, at least as it pertains to their rate. It's going to also allow, this is a big piece that I really like about it, it gives you a one-time float option for in case something else happens in the market and rates somehow go down for a little bit. But this float down option, you can utilize 30 days before closing.
Wow.
And if the rates are lower than what you locked at originally, you can take advantage of that lower rate that one time. It's called a float down option.
And that's huge, because I'm not going to throw any builders under the bus, but I have a client who we were supposed to close in September, and now we're closing in April. And so their rate has been affected.
Just a bit, yeah. I'm sure
and there's been tons of world things that have happened that have caused supply chain issues and logistics issues. And of course, the pandemic impacted the crews building the houses. So tons of delays. So this is an amazing product. So if somebody needs this product, what specifically are they supposed to ask for? What's it called again?
A builder extended rate lock. So we can lock out to a year, but there's some builder timelines that are at 9 months remaining, 6 months remaining. Those are still really good times to do it. Because again, we're going into the summer, and all the mortgage people basically are planning for increased rates. So from a financial perspective, it's going to make sense, but also from a peace of mind perspective. You're going to have a client who's building a house, which is stressful enough. It's fun for the most part, but there's stress, right? Because all some of the factors you mentioned, supply chain, labor stuff. So there's a lot of things going on. The last thing we want them to be worried about is what's going on in Russia or what the Fed's going to say next, and it's going to affect their interest rate. So let's lock it in. Let's give them some peace of mind. And then they can always utilize a float down option if the environment does improve. So they're protected from all angles.
Nice.
Yeah, it's a really good product.
What do the qualifications look like? How does this compare to conventional, FHA, VA, traditional loans that clients
Yeah,
are
so
applying
you can
for?
use that in conjunction with either of those loans. Conventional loan, VA, and FHA are all eligible for a builder extended rate lock. There's some loan programs, maybe a jumbo loan or down payment assistance loans that's not available for, but for the majority of people who are using one of those three, that's going to be a good fit for them.
Okay, so it's almost like a product that overlays on top of the existing
Yeah,
FHA,
exactly. We'll get them,
conventional or VA.
the process works, we'll get them pre-approved, we'll present the loan options to them, and then we'll go to another conversation about will it make sense to offer an extended rate lock. So that'd be more conversation because we want to have some assurance from the builder knowing that, hey, this is scheduled to close and there's not going to be pushing out in 3 or 4 extra months. 1 month we can work with, but so we want to do it in a certain time frame that everyone's on the same page and the builder is aware of what we're doing and the customer is, everyone's on the same page so we don't get in a tough position. So as long as there's over communication, a lot of planning, this will work really well.
Awesome. Great. Thank you for that. All right. So that's a good loan product that helps people get into a primary residence. But on my video, I also discussed investment properties such as long-term rentals. So do you have any products specific that would help somebody who's looking to get into the investment world in real estate and specifically like long-term rentals?
Yes, absolutely we do. They're called investor cash flow loans. These are very popular loans and they're a great fit. We're doing more and more of them. And they're a little non-traditional. They're not going to be your traditional conventional or VA or FHA, but they're going to be a fit for your investors or people who already own a primary residence and want to diversify their portfolio a little bit, maybe grab an investment property or two, or maybe people who have a big portfolio of investors. It's going to be able to work with both.
Okay.
So yes, that's a product we offer. It's for investment purposes only, so it has to be as an investment property, so no second homes or primary residences, anything like that. Minimum 20% down. Okay. So most investors are used to that, having put a larger down payment. So 20% down on a single family residence minimum. If they're going into a multifamily, like a duplex, triplex, fourplex, that's a minimum 25% down.
Okay.
So that's the main.
And that's pretty standard.
Yeah, it's pretty standard.
Yep.
It's the main. When I have that conversation with people, that's the first thing I talk about is the down payment. The second thing is they need to be current homeowners.
Okay.
So they have to own
got to own your own home.
They have to own a primary residence.
And I can help you with that.
And so if they're living
both.
Yeah. Exactly, and if they're living in other states and they want to buy in here, then you can help them with that purchase. Okay. Because they will own a primary residence even if it's in another state. So, so those are the two main qualifications. But there's a couple of great features about this product. First, as a lender, we don't actually need to verify income and employment.
Oh wow!
So I'll say that again. I don't get to say that often, but we don't have to verify employment or income. Okay. So we don't get into we don't get into a conversation like, oh well, are they going to budget? Are their debt to income too high? Oh, they have to pay something off to qualify. We don't have to get into that because we're not going to look at it, and we don't have to worry about people's income. Meaning,
why is that? What are you basing it on?
Well, we'll get to that. But someone's self-employed and they're taking advantages of the rules afforded to them as business owners who tend to be very, very savvy. We can utilize. We don't have to look at income, and so that's a good product for them. So you asked where the income comes from. That's a great question. We're just going to make sure the property has an appraisal attached to it, and there's rental comps. So your appraiser will go out, assess the property, and assign it a value. Like I said, as we normally do. They're also going to have a rental schedule, meaning how much could this property generate in rental revenue. And as long as that number is at or above your mortgage, then you're fine. We've covered the income piece. Nice. So if your mortgage payment's $1,000 a month and you find some rental properties and it cash flows for $1,200, then you're golden.
Yes, that's awesome. Now make sure you're taking into account your principal, interest, taxes, insurance, of course, but also maintenance, any kind of major repairs, and even vacancy. So as an investor, when you analyze your deal, make sure you have enough padding in there that you're going to cash flow on top of your mortgage payment and those additional expenses. The fascinating thing about this one is it's kind of underwritten like hard money, where they're just basing it on the deal itself.
Yeah, the underwriting comes from looking at the credit report, making sure it was strong, some solid credit, making sure they can prove ownership of a home. So some people have a home that's already paid off. So we look at, that they have paid property taxes, not tax returns, but just they have paid property taxes on their home. If they don't have a mortgage, we can look at it in the credit report.
Yeah. Wow, this could be a game changer for
it's
you guys out there.
frictionless in terms of the amount of paperwork, the amount of back and forth. It's basically, we're going to verify your down payment, we're going to track that, we're going to verify your credit report, put together some more administrative type stuff like homeowners insurance. But for the most part, this is a really, really strong product for investors. And going a step further, a lot of investors utilize LLCs to close in. And you can't do that on a normal loan.
Correct.
Like when I tell people ask me all the time, can we close in an LLC? And I say, well, my guidelines state we have to make loans to real people. It actually says that in the guideline, real person. In this product, we can close in an LLC. Nice. So they don't have to do any legal work afterwards, which can get costly if they're trying to move it into an LLC. Yep. So we can do that. A lot of people utilize 1031 exchanges. This product integrates beautifully into those concepts.
Awesome.
Yeah.
All right, so that's a great product for long-term rentals. Mm-hmm. What about short-term rentals? That's the other thing I talked about in the video last week, and it's super popular right now.
Yeah, it's obviously, Airbnb, all those things are coming up, are more prevalent. And yes, now we can use those for short-term rentals. Short-term rentals are available.
Nice, excellent.
Yeah.
So if you're looking in Port Aransas or Canyon Lake area or anywhere that's really a good vacation spot, hit me up. I'm very familiar with the Port Aransas area. I have one down there, and I've been helping clients in the Canyon Lake area lately. So awesome.
Yeah,
solution.
those places are rocking and rolling. Yeah, that'd be great.
So we've talked about the builder rate lock.
Mm-hmm.
We've talked about something for investments.
Investments, yeah.
I wanted to see if you had anything a little more niche. There's a lot of medical professionals in San Antonio. Yep. Do you have anything specific for physicians?
We do. We rolled out a physician's loan a few months ago, and that's really starting to be popular, and a lot of people are taking notice. It's a great loan. There are a couple things I like about it. First of all, there's an opportunity for 100% financing.
Wow.
And no private mortgage insurance.
Great.
That's a big deal, obviously, especially for doctors who are just coming out of med school and don't have a bunch of cash built up. They're going to be taking care of student loans. They're going to have the ability to do 100% financing as long as their credit is where we want it to be. It needs to be 720, so the credit the credit requirement for 0 down, 100% financing is pretty high, but it's still a viable loan option.
And what kind of physicians or doctors does it apply to? Do you have to be an MD? Can you be a PA? Can you be a nurse practitioner?
MD, but we can go to pharmacists, chiropractors, dentists. It's a pretty broad spectrum of MD. Psychiatrists, which was, and some of these weren't able in previous doctor loan programs. It's very, very strict on the type of doctor, but now there's more types of specialties included. No nurses, unfortunately. I wish there's something that came out for those, but for those physicians, they can get loan. Another way we're seeing this take hold in San Antonio, there's a lot of military personnel who do have doctorates, and they're going to come practice, right? And they need a residency program. And San Antonio is a very popular destination for these military doctors regarding various types of residencies, right? Psychiatrists, surgery, just internists, something like that. So when they come here, they're going to have multiple loan options open to them. We've talked, they're going to have the physician's loan, opportunity for 0 down, 100% financing, no private mortgage insurance. I have some people coming in from various areas of the state. They're in this program, and they're all buying houses, and we're all going to utilize the doctor loan program.
Awesome. Great. All right, so today we talked about 3 great products. The Builder Extended Rate Lock Program.
Right.
We talked about the Investor Cash Flow Loan. And we talked about the Physician Loan. Is there anything else in general that you want to share about you and your team that is helping buyers in today's market, as competitive as it is right now?
Yeah, it's super competitive. It's one of the most competitive I've seen. We've pivoted to is making sure your buyer is in the strongest position possible when they're making their offer. So for a long time, lenders have interchangeably used words like pre-approval, pre-qualification, so on and so forth. So my team's taking this to the next level. We want to make sure that the buyer presents the strongest offer to their seller. So a couple of levels, right? For the pre-qualification, that's usually the easiest. That's usually like, hey, so they fill out an application online, and it spits out some sort of approval based on the client inputting their information. A loan officer hasn't really verified anything. They've looked at the credit, And they've said, well, if this person makes $60,000 a year, like they've said, and they're paying off this and this, and they're getting the money from this, like they've said, from their bank, then we should be good. And that's a pre-qual. So, you know, when in a different market, those are fine. You probably need, you know, those are very basic stuff you need in an offer. We then went to pre-approvals. In our language is more a loan officer actually looking at the pay stubs and the bank statements and the credit, looking at all that and verifying. Yeah, you said you make $60,000 a year. Yes, you do in fact make $60,000 a year. I'm looking at your pay stub. There's no issues there.
Yep. And as a listing agent, I can tell you firsthand, my clients are asking me these questions. So the sellers are aware of this now, and they're asking specifically, are your buyers pre-approved or are they simply just pre-qualified?
Right. And so what we're doing is now we've learned that's not even enough anymore, because what we're doing now is going through a process called underwriting. And we're doing that up front.
Okay.
We used to do that mainly for files that were going to be somewhat difficult, have maybe some credit issues or something like that. Now we're doing it for all files. So even people have 800 credit, putting 20% down, so on and so forth. We're still gathering the documents. We're pulling their credit. We're gathering all their documents. We're verifying everything they would need for the approval. Then we're sending it to an underwriter.
Nice.
And we're going to have the underwriter condition it. And meaning they're going to approve it and give conditions for us to meet to obtain and clear to close. We're like, you know, basic stuff like get your insurance, verify this, have the seller send that. So we are able to then turn a pre-approval letter, that's the second phase, into a conditionally underwritten approval. So it's going to look a little different. It's going to say we verified all this stuff. There's going to be strict notes on the paperwork itself telling the seller and the listing agent that this client has been through the gamut already, and there's no chance of this falling through because an underwriter has seen it all and approved everything. They've approved their credit, approved their income, they've approved their assets, verified everything. We just need a property.
Yep.
We just need to go under contract. So what you're turning your buyer into almost a cash offer, which is as close as you can get. And that's giving my clients a leg up on any offers. Because if you think about it, if a seller, and you're probably in this position, you have 5 or 6 offers to look at, and they all have some sort of financing attached, but someone comes to you with a underwritten approval that's gone 2 or 3 levels above what you're seeing, that offer is going to stand out, and the sellers are going to feel more comfortable knowing that A, this buyer has gone through all this, and B, that there's no chance of this falling through now.
Yep.
They just need to get the property.
Yeah, in the past I've talked to you guys about creating a sticky offer. This is one of those stickiness points that you can add to your offer that's going to give the seller confidence that you're going to make it through to the closing table.
Yeah, yeah.
So 3 great products to help you buy property, to help you buy real estate, whether it's your primary residence or an investment. And then you're doing extra to help you be more competitive in today's market, which is amazing. So if you're looking to buy soon, our contact information is going to be in the description. Reach out to either one of us. Happy to have the conversation and help you guys get started with real estate. Thank you so much for coming today.
Appreciate it. Enjoyed it. Yeah, it's been great.
Have a good time. Thanks, guys.
Thank you.